In this video, we're going to take a look at whether Apple's stock is a buy right now. So before we start, please like this video and subscribe to our channel for weekly updates. Let's get started. The main focus of Apple's stock ticker, AAPL, was the iPhone division. However, the services portfolio, which includes revenues from cloud services, the App Store, Apple Music, Apple Care, Apple Pay, and licensing and other services, has now become the cash cow. Moreover, non-iPhone devices like Apple Watch and AirPod gain significant traction. Apple dominates the wearables and hearables markets due to the growing adoption of Watch and AirPods. Apple's presence in the personal health monitoring space has also grown, thanks to how well the Apple Watch has sold. Apple is one of the most innovative companies to date. Investing in Apple has felt like a no-brainer as its consistently successful products seem to make the company unstoppable. The Nasdaq 100 Technology Sector Index has fallen 35% year-to-date as a result of inflation and sluggish consumer spending, whereas Apple's stock has fallen only 17% during the same time period. Trendy products such as the iPhone, MacBook, iPad, and Apple Watch have grown Apple's market cap to $2.4 trillion, making it the world's highest valued company. As a result, investors such as Warren Buffett have heartily vouched for the tech manufacturer, consigning 41% of Berkshire Hathaway's portfolio to Apple. The iPhone titan has proven time and time again that its business is consistent and able to weather most storms. However, sales for its latest iPhone may not be as positive as some have reported. If true, the company's biggest segment could take a significant hit in its current quarter. Apple's primary source of income. For the last decade, iPhone sales have made up at least 40% of Apple's revenue for the previous decade, with some quarters seeing the smartphones hit almost 70%. For instance, in the third and most recent quarter of 2022, Apple reported iPhone sales had made up 49% of its revenue. Meanwhile, the rest of its revenue went as follows: 8.7% to iPads, 8.8% to Macs, 9.7% to wearables, home, and accessories, and 23.6% to services. Like clockwork, Apple announces its newest lineup of iPhones almost every September, with sales remaining consistent throughout the year. In addition, Apple has made a significant push into services over the last few years. The introduction of apps such as its streaming service Apple TV+, Music, Fitness+, and iCloud has pushed consumers further into the company's ecosystem of products and boosted revenue. In the fourth quarter of 2021, services made up 15.7% of the company's revenue versus 23.6% in Apple's latest quarter. The rise of services is positive as it can aid in safeguarding the company in the event of poor iPhone sales, which looks to be a real possibility in Apple's latest lineup. A possible decline. In September 2022, Apple unveiled its latest series of iPhones with the iPhone 14, Plus, Pro, and Pro Max. The lineup saw a return to the Plus model for the lower-tiered phones, which hadn't surfaced since the iPhone 8 Plus in 2017. Since then, the most prominent option has only been available in the Pro models under the label Pro Max. While multiple media outlets have reported record-breaking sales for Apple's iPhone 14 Pro and Pro Max, a recent report from Apple analyst Ming-Chi Kuo has shown poor sales for the iPhone 14 and 14 Plus. Kuo explained that the Pro models are currently showing delivery wait times of more than 4 weeks delivery, which suggests good demand. However, the iPhone 14 and 14 Plus has been available in retail stores from their launch dates, which reflects lackluster demand. Weak pre-sales for the non-Pro models are concerning as they are usually the highest-selling iPhones in the yearly lineup. For example, in 2019, the base model iPhone 11 was the top-selling version weekly in the year's last quarter. In the first half of 2020, the iPhone 11 sold 79% more units than the Pro Max version and 82% more than the smaller Pro model. As the lower-priced base models, the iPhone 14 and the bigger Plus version would generally be outselling the Pro versions, but that doesn't seem to be the case in 2022. Kuo surmised that current sales indicate the iPhone 14 and Plus are selling worse than last year's iPhone 13 mini, which Apple cut production on in the first half of 2022 because of low demand. As a result, Apple could do the same to the iPhone 14 and Plus and slim down production as soon as November, according to Kuo. In the latest iPhone 14 lineup, Apple worked to widen the gap between the base and the Pro models, offering far more new features and tweaks in design to the more expensive versions. However, the result meant incremental differences between last year's iPhone 13 and 2022's 14, and price hikes abroad had caused far worse iPhone sales than in previous years. Apple gaining market share. The markets Apple competes in are highly competitive. There are many vendors for smartphones, PCs, and tablets, and these devices were in high demand during the pandemic, with more people working from home. This makes Apple's recent share gain in smartphones all the more impressive. Samsung is the top smartphone manufacturer, with a 21.8% market share in the second quarter. Apple is second with 15.6%, but both companies have gained a share over the last year at the expense of the rest of the market. Apple's share was up from 14.2% in the same quarter of 2021. Apple is also gaining share with the Mac. In the third quarter, Mac overtook Dell for the top spot in the US market for personal computers with a 28.8% share. This significant gain comes as Apple enjoys strong demand for its new Mac lineup powered by its proprietary M1 processors, recently moving into the M2 generation. These market share gains reflect a strong brand and a superior supply chain during shortages across the semiconductor industry. In addition, CEO Tim Cook's experience as Apple's chief operating officer under Steve Jobs shouldn't be overlooked. Demand for iPhone 14 Pro Max. Apple set a record for iPhone revenue in the fiscal third quarter ending in June, and analysts expect another relatively strong quarter of sales in the next quarter. The consensus analyst estimate is calling for total revenue to grow 6.6% year over year, but one analyst believes Apple will report even better numbers. The new iPhone 14 Pro Max, which sells at the premium price of $1,099, has experienced more robust demand than Apple expected. As a result, the company has reportedly cut production of the cheaper iPhone 14 Plus as more customers opt for the top-shelf model. Morgan Stanley analyst Eric Woodring believes Apple will report a better-than-expected quarter due to sales of iPhone, iPad, and Mac remaining stable amid a challenging economic environment. As a result, Woodring sees Apple reporting revenue about 3% above the $88.9 billion consensus revenue estimate for the September-ending quarter. Apple's services segment remains key. Apple began to report the financials for its services segment separately in 2017. Since then, investors have paid close attention to those figures because of that segment's strong growth and much higher gross profit margins. The services segment at Apple includes just about anything it offers via a subscription, from iCloud to Apple Music to Apple TV+. But, at the close of Q4, investors wonder if consumers are starting to tire of subscriptions. It's a question being asked more after streaming giant Netflix's subscriber base shrank during the first 2 quarters of 2022. Price hikes were one driver of Netflix's decline, and Apple recently increased the price of its popular Apple Music subscription. Unfortunately, the latest report didn't have the answer, so we'll have to wait and see whether the recent hike has a negative impact. Relentless competition is another issue for Apple. Consumers are spoiled for choice when it comes to streaming platforms in general, and for many people, it's becoming harder to justify the expense of continuing to subscribe to all the ones they'd like, especially in this economy. That combination of factors could explain why Apple's services segment revenue grew in fiscal 2022 at its slowest pace since the company began reporting it. It could also just be that the pandemic pulled forward a lot of subscription growth into 2021, and 2022 is just feeling the hangover effects from the outsized growth a year earlier. This is one metric to keep an eye on next year. Despite the slowdown, Apple still set a record for services revenue in the fourth quarter on the back of 900 million paid subscriptions across its ecosystem. Apple has also broken new ground this year in the segment. First, it expanded its Apple Pay product by introducing Apple Pay Later, its own take on the buy now, pay later, BNPL, installment-based lending services that have grown popular recently, particularly among younger shoppers. This could pull market share from credit card providers, and since Apple has an installed base of nearly 2 billion active iPhones, its uptake could be much swifter than its BNPL competitors. iPhone risks and premium valuation. One uncertainty for Apple looking ahead to 2023 is a lengthening replacement cycle for iPhone. According to some estimates, some users upgrade about every 3 to 4 years. Since the iPhone still makes up about half of total revenue, this could present a problem for Apple's growth if consumers start to hold back on upgrading to new iPhones in a recession. This presents a near-term downside risk to the stock price that investors have to decide if they are willing to accept to achieve long-term gain. The stock trades at a forward price-to-earnings PE ratio of 22, which is a premium to the S&P 500's forward PE of 17. One weak quarter would likely send the stock down from these valuation levels. Apple generated over $100 billion in free cash flow over the last year and has nearly as much in net cash sitting in the bank. So it's a financial fortress that can navigate difficult waters in the economy. But if you are looking for undervalued stocks with low downside risk in the near term, Apple doesn't fit those criteria. With the stock trading at a premium valuation, we recommend caution about buying Apple shares in an era of inflation at 40-year records. Why Apple stock might be a buy right now? Yes, Apple's growth slowed during fiscal 2022. And yes, economic weakness may persist for a while longer. Apple CEO Tim Cook highlighted those issues in the company earnings call, along with the geopolitical tensions in Europe and climate change, as areas for concern. But these challenges are not unfamiliar. Apple navigated recessions in the 1980s and the 1990s, not to mention the tech wreck in the early 2000s, followed by the Great Recession of 2007-09. Yet, it weathered them all and became the most valuable company in America. Consumers now have a record high number of active iPhones and a record high number of Apple subscriptions. For shareholders, Apple generated a record high $99.8 billion in net income, or $6.11 per share during fiscal 2022. In addition, it returned a record high $89 billion to shareholders through stock repurchases, plus almost $15 billion in dividend payments. The company is a cash-generating machine, and despite its short-term challenges, it's set up to continue its long-term success. With Apple stock trading down 16% year-to-date, this might be an opportune time to buy, especially for those with at least a 5 to 10-year investment horizon. According to Bloomberg, analysts expect Apple sales to rise 6% in its current quarter, down from 29% the previous year, primarily fueled by pandemic-bound consumers pumping up demand for technology. The company has bet on its Pro models this year, which have so far reached record numbers. However, the question is, will the higher-end versions sell enough to offset slower sales from the base model iPhone 14s? Only time will tell, but Apple continues to be an excellent investment in the long term. While a potential dip is concerning, the company has proven itself as an innovative company worth investing in over time. The stock may be even more of a buy in the case of a dip, as it is unlikely to be down for long, suggesting current investors would do well to hold until shares rise again. Do you think Apple is a good long-term buy for your investment portfolio? Let us know what you think in the comments below. Don't forget to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Happy investing, and thanks for watching.